Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So, big day on Wall Street. Everyone's like, oh, how did this happen? How could we have maneuvered? Well, we try and arm you with a few different tactics on how to take advantage of areas of the range. When we entered this week yesterday, earlier in the morning, I was tweeting, listen, the weekly low is S&P Cash 2420. What do we do today? This was yesterday. Do we get below 2420, stay below it and correct further? Or do we get below it, reclaim it, and try and bounce? You never know what type of bounce we're going to have, but if you adjust prior to it, you don't have to know. You can be pleasantly surprised. If you look here at the chart of the S&P Cash, you will see, this was the topping tail way back on August 8th. I've talked about that day. That was when you could have sold some loose longs. You had a nice big move from the descending trend line here after holding the 50-day there. That was your first day saying, hey, you know what, maybe we're going to retrace a little bit. Maybe we're going to correct. And we actually did correct. Then all of a sudden you had another doji kind of lower high. And then all of a sudden we talked about, this 21-day, 2460 to get out of the way. So coming in this week, all we knew was the low of last week was 2420. That's it. So if you sold here or you sold there, you had the luxury of just approaching this spot. So if you look here, look at this little day. What do we call that in Red Dog land? We call that a Red Dog reversal. What does a Red Dog reversal means? It means it went below 2420, went to 2417, 3 handles below, and reversed up. It didn't fall down for another day. It didn't get to 2400. It didn't get annihilated. No, it reversed. So anyone who sold had to rebuy, and anyone who pressed a short thinking we were going to get lower prices had to pretty much cover. So yesterday I tweeted on Redler All Access, I'm going home long the spiders, which correlates to the S&P Cash and the Qs, because both had what? A Red Dog reversal from 2490 to 2420, almost 3%, worthy of a try. And then we had today. So with that being said, we mapped out resistance 1, 2, and 3. Well, resistance 1 was taken out very fast, sold some of my longs into that, was done with it by the time I got back from Cheddar TV into here, and look at the size of the move there. So now the question is, what's next? Can we see lower prices? Was this the bottom? Well, at this particular point, okay, this was your Red Dog reversal to cover some shorts, maybe get long. Here is your, pretty sharp rally. Okay, now I would think somewhere around here, the sellers are going to have to come in and make another lower high if they want to keep this trend intact. Okay, so what I suggested today is, after being long the indices yesterday into today, maybe now go put some stocks you like, but put an S&P hedge on, or a Qs hedge, or a spider hedge. So this way, if all of a sudden some bad news comes out and we're down 7 handles tomorrow, you could be short the spiders and cover down 7 handles or 60, 70 cents. And if you're in the right stocks, you might be able to buy more for them to go green. So this way, you're not trapped by the indices. You actually make a little bit of money, short the indices, and then you have a little bit of a hedge on, so you could sleep having 3, 4 longs on, and then maybe you could even buy more of your longs if they're strong, go green, and take out today's highs. But if we open up, not the end of the world, right? If we open up, you're in 3, 4 positions, you could trim some into strength, and then you'll be losing a little money on your spider hedge. But if you go back to the S&P Cash, I would think, just like after this day, we should get a little bit more give, where if the spiders are up 50 cents, you might be able to short more for them to maybe go red and trade around them and also make money in your longs. So that's kind of my thoughts. If you want to look here at the spiders, very similar. Spiders gave us an entry with the Red Dog reversal tactic here at 242.20. And then look at the size of this candle. And now it should be coming into an interesting area tomorrow, where if you do take home a spider hedge because you have too many longs on, I would think it should at least pause there. Whether it pauses, goes sideways and break above it, that's another story, or whether it kind of pauses into it where you could add to it and just be comfortable. Okay, it went through resistance 1 really quickly, and it went through resistance 2, and it's approaching this resistance 3 area, which is coming in, really close. So a gap up, you add to your spider short, trade out of some of your longs. A gap down, you cover some, you add to some of your longs, and you figure it out. But at least you have, some action happening. What are my longs? I'll go over them, because whatever you're in long, you should have a reason for it. Whatever you're short, you should have a reason for it. So Apple to me is best in breed. I'm long Apple. Apple, if any stocks can get back up towards highs, if the market's going to be good, this stock should get back up towards highs and show a little bit of power. Closed pretty well here. Here's the upper end of the range. I was long it from this spot, sold it there, so I had the luxury of buying it today, and now there's some room to get back up there. Does it happen? I'm not sure, but you know what? To me, it's above the moving averages, held this huge earnings gap, so this to me is best in breed. So if I had to be long something, be long Apple. I haven't been in Netflix in a while. I'm in Netflix. Why I'm in Netflix? Because, you know, you had the 50-day right here, which it kind of held, and it's trying to clear this small descending channel here. Poked its head above 169. I think that, you know, if we're up a little bit tomorrow, it could at least test the 21-day. So my thought is all these high beta names that have been below the 21-day kind of poke their head up above it, so they have a little bit more room if they want it. You know, if you sold it up here when it broke this little, you know, post-earnings strategy, that was 190. So down here towards 169, you know what, you're getting 20 points less. So we'll see if this starts a move to the upside. If the market's not going to be good, then it's not going to. If the market's going to be okay, you would think that, you know, this could have a little bit more room. So I even think you can almost even add to it tomorrow. If it will open down, you buy it, gets above today's high tomorrow, you know, it could see a nice little push. So I think I think this Netflix is tight here, worthy of you know, a focus. Amazon, you know what, it's Amazon. You know, it held this 950 area. You know, so it gave you a small red dog reversal yesterday. It took out this little 2-day pivot. In my humble opinion, if the market goes up a little bit more, I think we could see a move back towards the 21-day. I did play it last time. You know, it stalled at the 21-day, so I do think, you know, if you want to be in something that's closed okay, well off the highs here, well off that, you know, reversal high here, I think that if you had to be in something, you know, hopefully Trump doesn't come out with a crazy tweet tonight against Amazon and the Washington Post. That's always a little bit of a thought now when you're in Amazon, but you would think it can, you know, it could push a little bit more. If the market's not going to be all of a sudden a trap tomorrow. Google actually responded well. I'm not in Google, but it already took back the 8-day. It's already at the 21-day. So, you know, this Google, someone asked me to take a look at. Google held, you know, this big gap going sideways, took out the 2-day pivot like Amazon, actually had a little bit more power. You know, it could see a move up to here and maybe even the 50-day. So, you know, it's worthy. If you're in Google, if you like Google better than Amazon, then you're in that. I don't think you need to be in both. But if you are, that, you know, then you are. If you are, then you are. So to me also, NVIDIA, I took them a little bit because it looks a little similar to Netflix where it's tight, held the 50-day, hasn't really shown any power yet, but I want to have my eye on it just in case it does. You know, that'll give us some clues that the market 3% move from 24.90 down to 24.17 that held the 100-day. Maybe that 3% move was it. Maybe it's not. But if that was it, you're going to see some of these names start to, you know, just clear some of these areas versus just, you know, be a buy on support. So for NVIDIA, stock best in breed, you know, back in the day, or not even the day, was about a month ago, you know, held here, going sideways. I feel like, you know, if it wants to, it could take out this 2-day pivot and could see, you know, a bit of higher prices. So just trying to play a little bit of a you know, chart building type of thing here. Still has something to prove, but it's above the 50-day, takes this out, it can go. So I'm in a feeler. I'm in a feeler of NVIDIA and a feeler of Netflix, and I'm a little bit more heavy in Apple and Amazon, but we shall see. You know, you could probably go through a lot of these things. And in my morning note, I said if IBBs could take back 307, you probably get a rally back to 312 to 314. You know, so looks like most things, that's what happened here with the IBB. While I was at the level, well, here was your, you know, support going sideways, took out the 2-day pivot, and now it seems as if it's coming into the 21-day, and maybe, you know, we open up tomorrow, this could be your spot to fade a little bit, or if you stayed in some, to sell. So that's kind of my thought process. Yesterday, red dog reversal, take the indices if you didn't know what to do, and we had a nice trade there. Today, if we get a little bit more upside, you know what, being stocks you like for a reason, maybe have a little bit of a hedge on that might take away from your longs in the morning, but if we open up, you could sell some longs. You could probably add to your spider hedge or Q's hedge and trade out of it. Today, if you came in short, they didn't give you, you know, a spot to breathe. You had to cover it and say, I'm done. And if you rolled it up all day, you're probably going home miserable tonight, and it's August 22nd, the sun's out, it's summertime, and you shouldn't be going home miserable in August. Hopefully you never go home miserable, but in August, if you're rolling it up and you're getting frustrated and you're getting stubborn, go to the beach and recharge your batteries. You shouldn't be here. So we'll see what happens tomorrow. We have a plan if we gap down or if we open a little softer. We're up 20 handles, so we could be down 6 or 7. You know, same way we were up 20 handles and we might be up 4 or 5. So if you want to not be flat, there's ways to go about it if you have a process and a plan, and I'll help try and navigate you tomorrow. You know, Redler All Access is my private Twitter feed. Less than $10 a month. Okay, I talk about all my positions. I start tweeting at 4:45 in the morning. I give you guys a lot of situations to get involved in if you want to as an offense coordinator and a defense coordinator. I also let you know what I'm doing, you know, from the get-go, during the day, and even when I'm taking home. So I think it's a worthy product, as well as my Redler Full Access, meaning, you know, you get a note that's delivered at 8:30 in the morning. Instead of a 5-minute express, you get a 20-minute full version. And either which way, you know, use your resources if you need them. If you don't, you just like tuning in to see my quick take, that's cool too. But that ends on September 5th, and that's a T3 Live decision. Have a great night.